So, based on popular demand, in other words, a lot of viewers have asked for some kind of tax tips during not only during the tax season but also after the tax season. So we just decided to put up a small video to sort of explain to you small business tax seasons. Here are the important tax forms, dates, and terms every business owner must know throughout the year. So we're not just talking about during the tax season, but we're speaking about any period after April. Okay, from April through December and beyond, you need to have a clear idea of a certain items. So I want you to stick around till the end of today's conversation. Welcome back, folks, to another edition of the Awesome Sweetie Kiwi Show. How are you today? I hope you are doing fantastic. I'm doing marvelous, if you were to ask me. If you are doing as great as I am, go grab a cup of coffee or tea or vodka and let's roll. In today's conversation, I want to speak to you about small business tax season. And here are important tax forms, dates, and terms that you, as a business owner, must know throughout the year. Let's talk about the tax forms first, okay? So, the IRS offers a number of forms that help small businesses file taxes and make deductions. Okay, so if you know each of if you know the ones that really pertain to your business, this is kind of cool. First is we have the Form 940. So what is Form 940? So with Form 940, you are actually reporting annual federal unemployment tax. Okay, so that's your FUTA taxes. So when employees are let go for reasons beyond your control or their control, they receive unemployment insurance. So as an employer, you pay into this program, and Form 940 determines the amount you contribute. So you only need to submit Form 940 once a year. It's not a quarterly thing, it's an annual thing. But you need to pay your FUTA tax payments quarterly. Okay, so the tax payments happen quarterly, but the filing of the form itself is once a year. So Form 940. So the due date is February 1st of every year. And then we have Form 941, Schedule B. So this form, the Form 941, also known as Schedule B, reports how much federal income tax and payroll taxes you have withheld from employee paychecks. Okay, so Form 941 must be filed on a quarterly basis. So this form is only required for businesses with employees. So if you are a sole proprietorship or you are a single member LLC, you don't need to file Form 941. So the due dates for the first quarter, April 30th, second quarter, July 30th, third quarter, October 30th, fourth quarter, January 30th. And then we have Form 1099. So Form 1099 is you have to send this form to your independent contractors. So this form actually reports how much you pay them for their services within the tax year. So the IRS is sort of like tracing the data that you report to them to the data that they report to the agency, so they can have a cross check. Okay, and the due date for this form is February 1st. The fourth form is a Form W-2. So it's really important. So you want to send Form W-2 to each of your employees, okay? So this form reports their annual wages and the amount of taxes withheld from their paychecks. Okay, this is kind of important. So the bottom line is, as a small business owner, you are responsible. Remember, you are ultimately responsible for issuing W-2 forms to your employees no later than January 31st and submitting copies to the IRS. So you can use accounting software such as QuickBooks or Xero or Expensify to actually generate these things automatically. Or you can just outsource the whole thing to a third party such as ADP, for example. So let's talk about Form W-4. So your employees will fill out Form W-4. This form is kind of cool because it reports how much tax you, as the employer, should withhold from their paycheck. Okay, so your employees may claim allowances for spouses or dependents on Form W-4. So employees may also instruct you to withhold more taxes from their pay if they work several jobs or if their spouse earns income too. So the due date here is February 15th. Then you have the Form 1040 Schedule C. So this applies to folks who are single member LLCs or sole proprietorships. So Form 1040 Schedule C reports how much money your business made or lost in any given tax year. So if your business is classified as a sole proprietorship, you need to file Form 1040 each year, okay? Think of it this way. Form 1099 reports how much each of your independent contractors made, and W-2 form reports how much each of your employees made, right? The Schedule C form exists so that you can report how much you, through your business, made as well, okay? And the due date here is April 15th of every year. Now let's talk about Form 1065. Now, Form 1065, also known as the U.S. Return of Partnership Income, declares business income or loss. Okay, so if your business is a partnership or a limited liability company, you will file Form 1065 each year to declare things like profits, losses, business deductions, and credits. So this is really important, but you need to, and you can be an S Corp and you can elect to be taxed as an LLC. That's totally possible. And the due date for this Form 1065 is March 15th. We also have Form 1120 that you need to know about. Okay, so Form 1120, also referred to as a U.S. corporation income tax return, reports corporate income or losses. So if your business is classified as a regular corporation, you are required to file Form 1120 each year. Okay, this is important. So the due date is the 15th day of the fourth month after the end of your corporation's tax year. You also have Form 1120S for S corporations. So Form 1120 is for C corporations, and Form 1120S is for S corporations. So that this is really important to know, because if you have an S corp, you need to file Form 1120S. Then you have Schedule SE. So Schedule SE really sort of calculates the Social Security and Medicare tax. This is the self-employment tax that self-employed individuals need to pay. So if you are self-employed, you need to calculate and file. You need to calculate your SE taxes. You need to file Schedule SE. So the due date for this form is April 15th. And you also have Form 8829. So this is a really important. I mean, we've seen this time and again. A lot of folks underestimate the importance of this, and they're just making a huge mistake, because the IRS is going to audit your ass really fast if they realize that you are not filing properly Form 8829. Okay, so Form 8829, also known as expenses for business use of your home, is used to deduct eligible living costs like rent and utilities as business expenses. Okay, so business owners who work from home either partially or full-time will find Form 8829 helpful for identifying which expenses qualify as tax deductible. So remember, I've said this before, the IRS is very specific about which costs can be deducted and what actually constitutes a workspace. So this means it's important to do your research or even consult a tax professional before claiming deductions. You don't want to have your ass audited, okay? So the due date is April 15th. And you also have Form SS4. So new businesses use Form SS4 to apply for an employer identification number. So an EIN is really a 9-digit number that the government assigns to employers, sole proprietors, corporations, and partnerships for tax filing and reporting purposes. Okay, it functions as a unique identification number for your business, and Form SS4 is how you get your hands on one, which is important. So overall, those are important. Those are the most important tax forms you need to know throughout the year so that you are compliant with federal and state fiscal laws. I want to talk to you now about the tax terms that you need to know. I mean, it's important to have a clear idea of the terminology we are speaking about when we speak about tax season, but also post-tax season, okay? So let's talk about the estimated tax. What is that? So the thing here is that if you are an employee, you have taxes withheld from each paycheck, right? So this is something, this is logic. It happens to all of us. As a business taxpayer, you are the one responsible for calculating and paying taxes for your business. And the thing is that the amount is called estimated because it can be difficult to predict revenue with 100% accuracy. So you can find out more about estimated tax. So you have to go to the IRS website, but make sure that you include how you actually arrive at your calculation. There has to be a sound basis for it. Okay, so that's what we call estimated tax. And a lot of times people actually just refer to the amount they paid last year or 2 years ago, and they just trying to average that amount out. And the second thing I want you to know is the payroll tax. So payroll tax refers to two figures. We're speaking about two things here: the tax deducted from an employee's wages, and the taxes that the employer pays to the government based on those wages. And payroll tax is usually calculated as a percentage of total employee salaries. And the government uses this tax to pay for things like income tax, Medicare, and Social Security. Remember that when we speak about payroll tax, you have to pay this at the federal level, but also at the state level, because the state want to have their cut too. This is important, okay? And the third thing I want you to really pay attention to is deductions, business deductions. So a tax deduction lowers your taxable income, which means that it also lowers the amount of tax you have to pay overall, right? So as a small business owner, you can often deduct home office expenses or vehicle expenses if you use your car for work purposes. I mean, there are a lot of other deductions, but I'm just trying to let you know that you need to have a clear idea of what your deductions are, and you need to tally them up. In other words, during the year, you actually collect them, you actually put them somewhere, so that come year end, you can actually lower your fiscal bill overall. This is really important. I want to talk to you also about exemptions. So what are exemptions? So basically, an exemption also reduces your taxable income. However, unlike a deduction, an exemption refers to a specific amount preset by the government instead of an amount that results from expenses. Okay, so the dependency exemption for children or a spouse is a common exemption. So if you think about it, this is a common example because the government actually sets the limits. Let's talk about depreciation. You got to have a clear idea of depreciation here, okay? So what is depreciation? So this is basically the loss of an item's value over the course of its life. So if you have a business and you buy equipment, anytime you use that equipment, we have loss of value. So for example, let's say you bought an all-in-one printer 3 years ago. Today it is worth less than the original purchase price due to age, for instance, daily wear, and the possibility that it is now obsolete. Yeah. So depreciation allows your business to write off the loss of that value. And this is an important element, especially if you are in a manufacturing field where you use a lot of machinery. It's important to account for depreciation. And let's talk about tax credits. So tax credits directly reduce the amount of tax value dollar for dollar. This is really one thing we love here is that when you analyze tax returns and you see the importance of tax credits, you really want to advocate for that. In other words, you want to actually make sure a lot more people understand the importance of tax credits, because tax credits are some of the best options small business owners have to save money on their tax bill. And you also need to understand business structure. So when we talk about business structure, especially from the IRS point of view, there are several ways to structure your business, right? You can be a sole proprietorship, you can be a C Corp, you can be an S Corp, you can be a limited liability company. Remember that from the IRS perspective, again, each structure offers different advantages, and it's important to choose the one that best suits the needs of your business, okay? So, and this show is not really about choosing the best tax structure, the best business structure for your taxes. But if you're interested, if more people are interested in the topic, we can certainly cover that. So mention in the comment section below if you're interested in that topic, and we'll make sure that we actually take care of it. I want to talk to you about extension. So extension is important because Filing for an extension means that the IRS will grant an additional 6 months. Okay, the number here is 6 months. So you have 6 months to complete and file your business taxes for any given year. So in order to receive an extension, however, you must submit an extension application. This is a form 7004, so 7004, before your original tax due date. So this is something you got to really be very careful about, because if you do it afterwards, they're not going to approve the extension request. What about audits? Well, everybody's kind of scared when they hear the word audits. They're not really that scary, but you just have to know how they work. So audits actually occur when the IRS wants to double check your records and ensure that your tax returns were prepared properly, right? So when your records are in order, or you have all supporting documentation, audits are nothing to worry about, really. So if there are discrepancies, the auditor will recommend a reassessment. That's just what it is. This is why we always say bookkeeping, proper bookkeeping is really important, not just for yourself, not just for your business or business conditions, but also for tax reasons, making sure that you are in compliance with federal and state fiscal laws. And let's just talk about accrual and cash methods. So accrual and cash accounting are two different types of accounting methods. Okay, accrual accounting is more common, and basically this is the method. It is compliant with something called U.S. GAAP. So U.S. generally accepted accounting principles. So this method actually records income and expenses when they are earned. Okay, so when the income is earned and when the expense is recognized, then you are actually using accrual accounting. So the cash method only inputs this amount when the money is received or paid. So with the accrual account, you record income when you invoice a client. With the cash method, you only record it when the client has actually paid. So there are slight differences here. If you are a small business, like if you are a micro business, a one-person business, you can actually get away with cash accounting. But if you happen to become a small business and you're actually growing, you want to be compliant with all laws, including accounting standards, and this is where you want to use the accrual accounting method. I'll be right back right after this. Don't go anywhere. Welcome back, folks, to another section of the Awesome Maturity Kiwi Show. We're also having a conversation about the small business tax season, and here are the important things you need to know, the important terms you need to know, and I want to talk to you now about tax dates. Okay, here are important tax dates for your calendar, and I want you to really maybe print this out, or if you want us to send you a copy, please mention that in the comment section. It's important to have this in your office so you have a clear idea what is due when. Okay, so let's start with the beginning of the year. So January 15th, this is the deadline to pay the fourth quarter estimated tax payments for the previous tax year. I have spoken to you before about the estimated tax payments, so you need to do that. January 31st, here is the deadline for submitting wage statements and forms for independent contractors. We're speaking about forms 1099, right? So you got to send this out by January 31st of the year. February 1st. So this is the deadline for employers to mail out W-2 forms to their employees. Also the deadline for businesses to provide Form 1099 to contractors. February 28th. This is the deadline for paper filing Form 1099 miss documents that don't have. So those are documents that don't have claimed amounts in box 7. We have covered this on other shows, but yeah. March 1st. This is the deadline for business to mail Form 1099 and Form 1096. We have an entire show coming up on Form 1096, so you might want to look forward to that. And March 15th. This is the deadline for filing business return forms 1120, 1120A, and 1120S for partnerships, multiple LLCs, and S corporations. Okay. March 31st. This is the deadline for electronically filing Form 1097, Form 1098, Form 1099, Form 3921, Form 3922, and Form W2G. March 31st is also the deadline for businesses to electronically file Form 1099 and Form 1096. April 15th. This is actually the deadline for filing business returns for sole proprietorships and single member LLCs. Also the deadline for first quarter estimated tax payments for the tax year. June 15th. This is the deadline for second quarter estimated tax payments for the tax year. September 15th. This is actually the deadline for the third quarter estimated tax payments for the year. Now, I actually have made it very clear, very easy for you to actually track things during the year. So use the calendar you see right now on the screen to help guide your filing processes. You can see on the calendar here. So we have everything starts on 15th of January. Then you have January 31st. You can see that on the screen. We're going to leave this on the screen so you have a clear idea of what we're talking about. The chronology here. So then we have February 1st. A lot of stuff happened on that date. Then we move gradually to February 28th, so the end of the month. Right, so you have a clear idea of what's needed here. Then you have a March 1st. There are things you need to do March 1st. Then you have March 15th. You can see that on the screen, what you need to do. What you need to do on March 31st. So we are basically in tax season here, right? So March 31st, things you have to do. And then the next date is April 15th. You can see that. So a lot of stuff happened on April 15th, but this is basically you have to file also your Q1 estimated taxes. And then we move gradually to June 15th. You can see this on the screen. So this is actually your Q2 estimated taxes. So from June, we move all the way to September. So we have 15th of September. This is actually your Q3 estimated taxes. And December 31st, that's your year-end wrap-up. So actually, there's nothing really, there's no filing happening on December 31st, but you got to prepare the tax year. You got to close your books. You have to start collecting, not collecting, you have to start gathering your paperwork for the tax season. Okay. It's important because, again, I spoke earlier about audits, IRS audits. You don't want that. So you can see the milestones on the second screenshot you can see on the screen here. So here what we have, the project details, the date, and also the milestone. And this is kind of helpful because, as I was telling you earlier, it actually helps you identify what needs to be done, and then identify what kind of claims you can actually make during the tax season to sort of lower your tax bill. Because the bottom line is you want to minimize your tax bill. You're doing all of these things to minimize your tax bill, of course, legally. Okay. All right, folks. This is it for today's conversation. I was talking to you about small business tax season, important tax forms, dates, and terms every business owner must know throughout the year. So the tax forms, Form 1040, Form 940 rather, 940, Form 941 Schedule B, Form 1099, Form W2, Form W4, Form 1040 Schedule C, Form 1065, Form 1120, Schedule SE, Form 8829, Form SS4. In terms of the tax terms you need to know: estimated tax, payroll tax, deductions, exemptions, depreciation, tax credits, business structure, extension, audit, and accrual and cash methods. And in terms of the tax dates, I've given you the long list of tax dates: January 15th, January 31st, February 1st, February 28th, March 1st, March 15th, March 31st, April 15th, June 15th, and September 15th. Thank you so much for your attention. I really appreciate it. I'll see you next time. But until then, remember, stay marvelous.